thinking outside the box or outside the barn can help turn what might just be a haphazard side thing for you into actual viable venture. And so, knowing some tricks or some advantages of being a business rather than just a hobby, actually planning for income rather than just selling a few extra zucchini, can really be an overall plus in your whole how you operate your farm. So, one of the things is that as a farmer, you are self employed, you are a business person, and you can take advantage of the kinds of things that a self employed person can take advantage of. There are some special advantages they give to farmers as well that are, in addition, the rules that they've either relaxed or they give exceptions to farming because it is unique in the kind of a business that it is. So, so the one thing of expenses, some expenses that might be considered home expenses normally, make sure you assess whether you're using them for the business and take advantage of that. So that's one thing. Another thing for a farm, they allow you to pay your kids and pay them earlier than you might pay another employee. And so the rules, be aware of what the current rules are, but you can pay your child earned income once they're productive and can be actual workers. It has to be legitimate work. And then you can actually have that money back from them for their room and board. You know, that's totally legit. They're living with you, and yet they've earned that income. And in the case of our kids, it was earned income. We could start Roth IRAs for them, which are a tax advantage savings plan for their retirement or for their expenses in their future. And that was something I learned from a farmer's tax guide kind of thing, you know, and it is an exception for farmers because children underage, you know, working age typically wouldn't be, you know, allowed to work, and there'd be all these laws against it. But the the laws are beneficial to farmers and farm families, knowing that we depend on our families for work often. And so you can use that to save money for your kids, and it comes off your income as a farmer. You don't have to pay your self-employment tax on it. Your kids get an advantage of starting a savings account with earned income, so they get a tax advantage of it as well, because that's probably the only earned income they have, and so they don't owe taxes yet probably on it. So that's one kind of outside the barn kind of thing to look at. And there are other things like that there to just be aware of. And these kinds of things you can see if you stay in tune with kind of market gardening newsletters or things where people who are, you know, pay attention and be professional, expand your knowledge base and keep learning as you go, and be sure to find things that apply to your situation. Another thing as a self-employed person is you have more control over how you save your money for retirement. So often when you're in an employment situation, you get a paycheck and you can choose to take some money and put it tax deferred into retirement maybe, but there's probably limitations on that or how the company may have it set up. As a self-employed person, you get to decide how you want to save your money for retirement, and there are several options for self-employed retirement plans. Some you have to know ahead of time, and it depends on your employees as well, whether you have to offer it to your employees as well, but there are ones that you don't have to, that can be just for yourself. Some you have to know ahead of time and do the money along the way. Others you can wait until you figure out how much you actually made that year and then decide how much you can afford to put into retirement. And by the time you file your tax return, you have to have that decided and have your account started, or have that money put in your account. And then that comes off not your farm profits, but it comes off of your overall taxable income. And so you'll still have to pay self-employment tax on that, but not income tax. And so that's another thing that you can really adjust your take-home pay and your tax liability on a year-to-year basis if you understand your options when it comes to that kind of ways of saving money that can benefit you and your farm business as well. So you may be doing it as a sideline initially. So you want to use all your profits to save towards retirement. And then when you retire, you want to, that would be part of your income stream, and you wouldn't put it away for retirement anymore. You would actually be able to take advantage of the cash flow in that year that you need it. So lots of situations where that's helpful. And related to that, in one way, as a business person, if you are buying your own health insurance, there's also a self-employed health insurance deduction. The plan, if you're if you're getting insurance through an employer or through a spouse or something, that doesn't work for that. But if you started a plan for yourself and you're a self-employed person, farmer, you can take the cost of that plan against, again, your overall income. Doesn't save yourself from the self-employment tax, but it would reduce your income tax. Just like in a employment situation, that would come off of your pay stub pre-tax. So there's things like that to know about and to use if you have them. There's also a retirement credit to be sure to take advantage of. So, even though you think you may not be making much money farming, and you may not be, that you can use the numbers and use that income that you do make wisely to plan for an overall goal you have for your farming venture and your farming enterprise and throughout the years. And you, as a individual person, as a private self-employed business person, you have a lot more flexibility over that and how you do that than if somebody else is deciding when you get paid and how you get paid. So be aware of those options in you, and those, again, you can look them all up, and the laws change occasionally, so it's not something you can necessarily decide one year and know that it's always going to be in place, but keep on top of that. Another way of, it's manipulating, but it's a legal way to manipulate how your income comes and goes and your expenses are, is who is actually running the farm and who owns the land that you're running the farm on. And I am not this is not legal advice, but there are ways where you can rent the farm from a spouse who may own the land. And then there you have a rental expense. Of course, the spouse also has rental income. And so you have to figure out how that balances out. We never personally took advantage of any of that kind of money manipulation. But I know other people who do that, not just for farming, but for businesses as well. A spouse may own a building that the person rents, the other spouse rents from them. And that's just a way of, if you know what your other income is, you can make it most beneficial to both parties involved. Some of it has to do with, actually, I don't know what it has to do with. So now that I think of it, so there was a gap there. There was tax. Oh, I know what I was going to say. So, and to keep in mind, although I am talking a lot about reducing your tax liability, showing a profit on your farm means that you also are, and paying self-employment tax means you are buying into the Social Security system, and that is a benefit overall. And you want to show profit, not just because you want to be a legitimate business, but because you want to be a part, to when it comes time to retire, you want to have credits in that system. And if you've always been self-employed and you've always made sure you show no profit or just enough profit to minimize your taxes, that's great in that maybe in your cash flow in that current thing. But if you aren't planning for your future as well and your future income and retirement, you have to keep that in mind. So look at it in the whole scope of your family's finances, whether who is getting income and what type of income, whether it be rental or the actual operational income, and a long-term plan, whether that cash flow is necessary now or whether the cash flow would be better to have later. And you can make decisions based on what is going to be best for you, and it's going to be different for everyone. And there's lots of very basic and legal, even though it sometimes feels like you're manipulating it. There are legal ways to make to spread out your income in ways that make the most sense for you, and can still comply with all the tax requirements.